All right, this is Walt Brewer with Network Funding and your Friday mortgage market update for December the 30th, 2011. Ending the year, about where we've been for the longest time here over the fall. We ended the week well. It looks like we gained a lot of ground here in a short amount of time, but this is such a tight trading range, we didn't really move all that much. And given the thin trading volume, we'll have to see how the pros come back in on Tuesday and adjust to the position of the amateurs over the holiday. I wanted to show you this longer term chart. We're still making good progress. We're on a very steady, slow, sustainable upward trend. Upward on the chart is lower in rates. You can see this is really mimicking the 100 and the 200-day moving average, and those are pulling up underneath us here to provide us support. If you look in this long-term chart, back here in October of 2010, this was the point where we had the lowest rates we've ever had. What's different now is that even though we've spiked above it, even though we are above it, rates aren't as good now as they were back then. And I think it's just a factor of there's fewer banks competing, and they are at a threshold where they're really not going to be much more competitive. There's not much more room to go. So we have to be careful here because bad news in the economy globally is not really helping us as much as good news could hurt us. So I'll keep an eye on all that for you and have a really happy new year. We'll talk to you next week, next year. Thank you.